Core. Amnish Aggarwal is joining us from PL, and we'll talk about the scorecard. The second quarter earnings have thrown up. Amnish, the narrative approaching the results was that this would be, people became watchful that this result season we would start seeing some early, kind of cracks in some of the numbers, either flat to weakish. But by the time we are winding up our second quarter earnings season, the narrative seemed to have changed. It turned out pretty okay. What were some of the hits and misses in your view?
You see, if you look at, say, the aggregate numbers which we have studied so far, I think there are two big factors why you can say, first of all, as far as your aggregate volumes are concerned. And when I'm saying this, we are referring to, say, the volume growth in any sector or the segment. So there has not been any big surprise element on that part. The demand conditions, they have not predominantly changed than what we were talking, say, a month or two back. But what has been surprising is that the benefit of benign raw material prices has been better than what it was anticipated, say, a couple of months back. So that is one. And the second thing is that the companies which are having a good amount of cash with them, their treasury incomes have gone up because of the higher interest rates. So I think whatever has been, say, the aggregate beat, so these has been, I think, these are one of the two major reasons why there has been, you can say, not a disappointing quarter as far as the numbers are concerned.
If you can talk about some of the names as well, from the mid cap, small cap, large cap, you choose to, wherever you want to talk about, some of the big upgrades in earnings where cycle may get stretched on the higher side going forward.
Look at, I think the best numbers, if you ask me, they have come from the capital goods and engineering companies. So whether it was, say, an L&T, or you can say the numbers of ABB or some of the other, you can say, even small cap to mid cap, kind of, you can say, engineering and capital goods companies, I think there has been broad-based top-line growth, and operating leverage has given them good margin expansion. So this is one sector I would say that it has done really well across the board, but barring, I think, most of the bearing companies or, say, some solitary segments here or there where the numbers have not been that great, but broadly it is one of the best performing sectors. Now, the second sector where I think the numbers have been pretty good has been the automobile sector. Because the volumes, any which ways, they were expected to be good, and I think the benefits of low raw material prices and operating leverage has come. So the numbers of most of the auto companies, they have been quite good, if you ask me. And the third, I think the largest segment, for example, banks, the major outperformance has come in numbers on the account of lower provision of NPAs, because the NPA provisioning has been lower. Otherwise, I would say at the EBITDA level, okay, there is not much of a change than what was being expected. Big difference has been the lower provisioning, because you can say the asset quality remains quite good as far as banks are concerned.
Amnish, quick follow-up from the capital goods engineering. Some of the mid-cap, small-cap names which are top in your overall house call or house report, if you could share some names, the earnings are good.
Okay, you see, among the larger ones, for example, your Siemens, ABB are the two stocks. I think Siemens, there was also a news flow today regarding, first of all, the acquisition of 18% stake by Siemens AG from Siemens Energy, and then maybe possible demerger. So I think both these companies are technologically very sound. They are among the global leaders, and they continue to look good. So among if you look at, say, the smaller names which are there, for example, we had initiated on Hindustan Aeronautics. It continues to look good. Bharat Electronics continues to look good. Then I think Apar Industries is one stock which we have been very positive about. Apar has done well over the, say, past at least two to three quarters, if not more. Then I think some of the, you can say, other mid-cap, small-cap name here, even GE&T has done well. Some of the names which we might not be covering, for example, your Schneider Electric, if you look at, say, your Elanta's back. So if you look at I think that is why I said that the growth rate is very broad-based, and the entire gamut of companies in capital goods and engineering have done well.
Okay, meantime, let's also get in a take then, Amnish. Afternoon, firstly, as to what the outlook is when it comes to the entire new age tech space. Do you believe that now that a lot of these companies have, upped their game in a way, pulled up their socks, put the focus on profitability, what investors and the stock markets really wanted to hear, that now this is a space that can be revisited? Would you be bullish on any names?
You see, we don't have formal coverage on many new age companies, but what I can say is that many companies have seen their business models becoming mature in the last couple of years. Many of them have even revisited the business model and made changes. And wherever in the tech space you find that the companies today are having much more nimble competition, and where there is some sort of a barrier to entry which has been created, those segments are likely to do well. For example, today you look at, say, a company like Zomato, where the industry was already consolidated. Now, predominantly Zomato and Swiggy are the two large players, and the market and the scope of growth is huge. Then such like models, I think you will see them developing. And one of their subsidiary, Blinkit, is also, I believe, catching up because the entire quick commerce space is also now doing well, is fairly consolidated. So I think even in the tech space, creating some sort of a business moat, and then you can say having some sort of a pricing power or threat to entry, that seems to be more important. And that is clearly playing out in case of, say, Zomato. When it comes to, say, a player like Nykaa, yes, they are doing well. Their numbers have also improved, but definitely the barriers to entry for a model like Nykaa, they don't seem to be that high to me at this point of time as they are for a, you can say, company like Zomato. Now, similarly, when it comes to whether you are looking at, say, Paytms of the world or Policy Bazaar, etc., I think some of the models are definitely maturing. But then one has to look at the longevity of the model, because particularly when it comes to the financial services, we have seen that many big houses, many big companies will come in, and the possibility of disruption in financial services seems to be significantly higher than many of the other segments of the, you can say, technology or new age companies. So the space looks quite interesting in the longer term, because as the consumers switch more and more to online, as we start using more of these payment gateways online, whether it is delivery, whether it is financial services or education, the fields are going to grow. And I think the kind of ecosystem we have developed in India, I think these stocks should do well over the period of long term. But I think, yes, many of them have matured, and for rest, I think it is more like a wait and watch.
Amnish, let's go back to our discussion. Look at that. Beautiful 300, almost 3% up in today's session. Amnish, I want to understand from you, you must have gone through dozens of analyst calls as well after the numbers. I want to understand a flavor of the commentary coming in from corporate India. Some of the calls which stood out in your mind on the road ahead, companies which have been negotiating the environment and doing very well, guiding at better margins, higher growth. Something which comes up in your mind. This con call.
It is very difficult to, you can say, take a cue from the calls in general, because each and every company is operating in different, say, environment and different set of, you can say, circumstances. But definitely, as I said, I can give you a very broad sense that, for example, if you look at, say, all the companies in the financial services or the banks. So the banks, I would say, they seems to be pretty in a decent shape. With, you can say, some compression in names might have happened for them, but the growth outlook for them looks to be quite good. Your NPAs are under control, but yes, there has been, you can say, some sort of a doubt which is coming that whether there could be some problems in the, you can say, the personal loans, which can come maybe not now, maybe, but in future. Similarly, if you look at, say, the entire, you can say, the broad FMCG stock retail space, then definitely the commentary which I can look is that there is still a lot of confusion as far as the rural demand is concerned. Some companies are indicating, you can say, some green shoots which are visible in the rural India, but the others are feeling more like a stay put kind of a situation. And clearly, on the entire broader consumption space, if you look, the clear disparity which I have been talking about is very clearly visible. Even I think the recent media articles on what happened during this last 3-4 weeks of the Diwali buying clearly shows that the demand for the premium goods, luxury goods, and the upper section of the society is intact. Whereas the, you can say the absolute mass or the economy products, they are not doing that well. So I think these are, you can say, some of the trends which we could clearly spot. And again, you can say, for example, you look at the capital goods sector. Okay, the commentary there, I think barring say maybe bearing companies or abrasives, I think commentary across the board has been very strong on the basis of, you can say, whether it has been in energy management, whether it has been say smart cities, smart infra, or energy transition. So their commentary has been quite good. If you look at say the entire building material stroke durable space, I think durable companies, except if you think, you can say power cable, whether it is residential or you can say the industrial. So the cable segment has done really well. You look across companies ranging from a polycab to an RR cable. So that their commentary has been very good. But when it comes to consumer durables, I don't think many companies have given any strong commentary over there. Similar is the case with say your certain segment on the building material side. So I think it has been very, I would say, segment specific, individual specific. And for example, hospital companies, many of the hospital companies have also done really well, and many of them have indicated strong, you can say, your occupancy level, strong margin outlook for the, you can say, coming few months. Even some pharma companies are showing that finally the pressure on generics might you can say, it's a thing of the past and the things should start improving. So I think it is, I would say, I won't single out any name, but definitely there are clearly certain sectors which are now showing that their momentum could actually be setting in some of them.
Given the fact that within the auto space, it was a pretty strong performance in the month of October, a lot of smart year-on-year growth, for instance, Maruti as well put out a 20% growth or so. The domestic wholesale numbers were fairly encouraging. What is it that you would like within the auto space?
You see, we have been positive. For example, Maruti is one of our top bets in the auto space because, as you said, the volumes have been good. The company is making a comeback into the SUV space where they were under-indexed, and the way their entire margin profile is, and I think the facility of the parent company which is now with them, so that will also add to, will provide the momentum. So I think Maruti remains to be quite a good play as far as your, you can say, the PVs. If you want to play PVs, I think Maruti is one of the best plays over there. Now, in addition to it, you see, if you look at say the two-wheeler space, Hero Motor has done really well in the past, particularly say a couple of months, because the stock was very under-indexed and the valuations are very favorable for Hero MotoCorp. But having said that, it all depends on how the rural demand goes, because the Hero has a maximum, I would say, contribution among all the listed companies for the, you can say, 125cc sort of a segment, which is, you can say, or the entry-level segment. So if the rural demand continues to look up and if the rural demand does well, then the Hero as a stock has, you can say, more legs to it, because the P multiples of Hero are relatively still on a lower level when compared to Bajaj, TVS and some of the other players. And on the PV or on the CV side, you see Ashok Leyland and Tata Motors, I think both the companies, they have been doing well as far as your numbers are concerned. But definitely, currently we are, I would say, already into the third year of the cycle, and it remains to be seen how far this your CV cycle can go. But Tata Motors to me seems to be a more holistic play, given the fact that they are now having JLR is now also improving. They are doing well on the EV side. And now this Tata Technology IP is also coming. I think there could be some more momentum which could be there in the Tata Motors as well.